And good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, September the 20th at 11:25 a.m. Pacific Daylight Time. I am actually going to start on the NDX, but I am not at my home computer. And so I am working off of a laptop at the moment. And so it becomes a little bit more difficult if I try to open up my largest maximum monthly to kind of show the progression of where we are. So I will verbally do that by starting on my 3-year weekly chart. And I probably can go ahead and see if I can get the 5-year up. Yeah, good. Okay, so where we are in the NASDAQ, we are in I believe, the finishing stages of a primary third wave. What's going to be inside that primary third wave is 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. So we're within intermediate wave 5 of primary wave 3. So we're close. And within intermediate wave 5, there are going to be 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. So effectively, we're in minor wave 5 of intermediate wave 5 of primary wave 3. So we're getting close. Within minor wave 5, there are going to be 5 waves. And let me come down one notch. Let me come down my daily. There is the minor 4. So we're in minor wave 5. It will consist of 5 waves of minute degree, of which 1 and 2 are complete. So we're in the third. We're in minute wave 3. And this is where the changes happened, which I did discuss during last week. So it would have been via the NQ. So this is updating the NDX chart. And that previously, this level was where I had placed minute wave 3. And this level being minute wave 4. And that was the running 4th wave. Well, I've dropped it down a degree. And so what we have is minuet wave 3. And then minuet wave 4 being that running 4th wave. So we're in minuet wave 5 of minute wave 3. So we're getting ready to hopefully complete that. So bringing that down, bringing it to the hourly chart, where are we? Well, if we are in minuet wave 5, it's going to consist of 5 waves of subminuet degree, and that's going to be 1, 2, 3, and 4 being complete. So we're in subminuet wave 5 of minuet wave 5 of minute wave 3 of intermediate wave 5 of primary wave 3. So that's the full count. And so I believe we're in those finishing stages to complete up to that primary third wave. So within this whole thing, we're still inside the minute third wave, but we're in wave 5. And now we're in subminuet wave 5 of minuet wave 5, which is going to top us out for that minute third wave, set up a little bit larger correction. So how high should we go, can we get before we're finished with this wave? Well, normally, what I do is 1, 2, 3, 4, and on a fib basis, we look towards the relationship between wave 5 and wave 1, and the most common, and so therefore we run that fib here to here, and that'll give us the fibs for wave 5. Most common is that wave 5 will be equal to wave 1. So equality is the most common. And that's set to 24,890. So we had a pretty good day on Friday. So really, we're now about 360 points away. No, excuse me, 260 points away from reaching that 100% for sub-minuet wave 5 of minuet wave 5. So therefore, they will and should complete together. Now, I don't have that. So I need to put those back up to see how we are going to come in there. So I need to let me just do this. And we're going to add there to wave 1 and then up to wave 4. And I'll go quickly. I apologize because so many times I'm like, oh, you forgot to do that. And so I'm going to edit this. We're going to put it in its correct color. And we're going to go like this. I'm going to do that. And one more. Go here and here and right there. And then we're going to come down. So we've already surpassed that 0.618 level. So our next one up will, of course, be 100%. And we'll go to the 1.618 because you never know with the NASDAQ. All right, so we're going to go over here. Now, bringing this back down, I'm going to drop it down to our hourly chart. And here we got the fourth. So we got this fifth wave, and we got this fifth wave. Now let's see where they meet up. So see where that comes in. Where minuet wave 5 would be equal to minuet wave 1 at 25,558. Now, that does not require, that's the most common fib relationship. But what will take precedence, of course, is the wave count within this minuet wave 5 up. And now we've got 1, 2, 3, and 4 complete. And we are looking for that minuet, subminuet wave 5. And that reaches its possible completion point at 24,891. What I'm going to call, I'm going to round it up. And so, but that would be where this subminuet wave 5 is equal to the subminuet wave 1. That's the most common. Second most common is 1.618. Now that's 25,440. Then I can come in and realize, well, I've got another fib up there, and that would be for minuet fifth wave, and it would then have equality with wave 1 at 25,558. Well, if it got to 25,441, close enough. In other words, it's like I would consider it all complete at that level. By the same token, there is no requirement for a fifth wave to be equal to the first wave. That's just the most common fib. We also have additional, which it may have surpassed. So let me just kind of go here and just take a look. I think it may have surpassed it. It did, which is why I didn't put it up there. So we can go over here and we can take that off. We can go here and call it 0.882, because that's also not as unpopular as what we think. So we have some in between. So we have 100% for this fifth wave at 24,890. And we have a strong enough rally that pushes up through that. It would take us to that level at 25,250, where this fifth wave would be 0.882 of the first wave. Also common and often used by algorithms. So, but we have now a cluster up here where we get this fifth wave and we get this fifth wave matching up at certain levels. But once again, I am going to state, if we get up here and I got 5 waves, and I'm going to bring it down to that 15-minute chart so we can take a look inside of this. All right, so there is that fourth wave. And 1, 2, 3, 4, 5, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. So we got a bunch of completion points that we need to do here. So within this fifth wave, again, on a 15-minute chart, I've got wave 1 of that 5, wave 2 of that 5, 1, 2, 3, 4, 5 of 3 of this 5, and then a 4, 5 to complete this wave, and then again moving out, and also completing all the way up minuet wave 5 and minute wave 3. So again, bringing it back out. Once that's complete, as I've been discussing, what does that do? Well, it opens the door, and this is the case. I want to come down again. and go my time frame. And I'm sorry that I got to do this every single time because this computer doesn't remember. All right, so there. All right, so back on this one. Once we're done with this minuet wave 5 and that minute third wave, well, then we're looking for a little bit larger of a correction. And Elliott continues to state that the fourth wave, once in motion, will find its terminus, its endpoint within the price territory of the fourth wave of one lesser degree. Well, I'll be coming down in a minute fourth wave. What's one lesser degree? Minuet. And there's the fourth right there. There's its completion point. 22,009, let me just go, 23,009. Oh, 23,092, excuse me. So that's where we're kind of have the potential to come back. Within the price territory, we have up here from 23,969 down to that 22,977. A little bit off before. So 22,977 is that low for that minuet wave 4. And then the kind of the top side of that running fourth wave comes in at the top of that B wave, which again is 23,969. So nice big range, but mostly we're going to be looking for it to come into this area down in here more than likely. And that was going to be fairly strong drop. And most realistically looking, going to be over 1,000 points. How quick? Well, I think it can unwind itself. First of all, start it as we lead up into the quarterly expiration on September the 30th, which likely will be on the large size. We're going to see how that builds in this next week. So about, 5, 6, 7 trading days, we'll be there. We'll be at that quarterly expiration. And depending on how things line up, where they start stacking gamma, where they start putting things, it could help determine how strong a continuation of a rally will get, what will give it any additional boost up or down, because we're going to be tying in our gamma levels as to what the market is setting itself up to do. And so again, once we're done with minute 3 and we're in a minute fourth wave, we're most people are going to be like, well, what's going to turn it? What's going to bring it down? To be honest with you, it could be its own weight. It's going to be the own weight. And if we're going past the 30th, which I believe we will be, we're into the third quarter. So within, I think, the first 2 weeks, so within 2 weeks into October, we start earnings. So we start third quarter earnings reports. And that may be a point with the market that we start to get some reflections from the underlying rates, from the companies, from the components of these indexes, to start to show a little bit more of maybe what tariffs are doing. We got another quarter now. And so we'll also have another quarter for also, not necessarily on the quarter level, but on the monthly level, we'll get additional data, inflation, additional data across the board. So a lot of that may start to show the market moving into some weakness. Now, again, if I'm looking for a minute fourth wave, then I'm going to be looking for a minute fifth wave back up to new all-time highs to complete the sequence up to and including primary wave 3. And it's from that upper level that we're looking for a primary fourth wave, which I think can kick off with a pretty strong down wave in the form of wave A. So an intermediate A wave down to kick off that primary fourth wave. And then we have a rally. So again, we're running against the clock, and I will get those updated as well once the quarter's complete, to kind of get a reflection via the algorithms, which scrape everything from the internet and then come back with projections. So that projection so far has continued to suggest that we should be expecting a a surge higher, a thrust higher within the fourth quarter. But it's been kind of pinpointing December. So a strong year-end rally. Well, here we are. We're going to have to start with a minute degree fourth wave. And this is all the way up so we can finish the minor wave 5, the intermediate wave 5, and that primary third. So we're kind of going up, finishing that, excuse me, the minute third of that minor wave 5. We get the minute 4 in, we go back up on minute wave 5, and then we are then completing up to that primary third wave. So that's in terms of reaching our high comes in. Now, what could then possibly happen? We're going to start this fourth wave down, and it could be wave A. So where could this surge come in into the fourth quarter? Well, if we're going to come down and we can complete the intermediate A wave of primary wave 4, or the B wave would be pretty strong. It would be a surge higher. So, excuse me. So bearing all of that in mind, we'll get there when we get there, and we'll know what's going to be going on. But I don't assume that right now that this continuation to the upside is going to take us all the way to year end. Again, a minute fifth wave, it could. I can't say it won't, and it can't. It definitely could. And beforehand, the little bit of a decline that we might get in the month of October, or I would assume we're going to get it in the month of October, could be bringing it down, and then we surge higher in this minute fifth wave. That's possible. And then again, that could take us through the end of the year. So, because minute wave 3 is actually pretty long in terms of time, the time factor. Going back out here, minute wave 3 began on April the 21st of 2025. And here we are heading into October. So we're really looking at, 6 months. 6 months for minute wave 3. So maybe we get a 1 month, 1.5 months for minute wave 4. Maybe. I'm just talking fib levels, fib timeframes. And then we start into that fifth wave up, minute wave 5 up. And that, is that going to take a month and a half? Yeah, if I have to say against the third, that on a time factor it does 50%, sure. That takes us to year end, possibly even to the beginning of 2026. So again, this is all still out there. We don't know just yet what that is going to look like. It's just like we have to consider, what can that fourth wave look like? Again, corrective. So it's going to be an ABC. But as I start, and I always say, there are between 11 and 13 different variations of a corrective ABC pattern. Now, if it comes through as a zigzag, so in other words, we get an ABC, which is a 5, 3, 5, that's pretty straightforward. That's the easy route. But understanding that the market lately doesn't take that easy route. It makes it much more complex, as we witnessed here with this fourth wave. It was a running fourth, a rare pattern under Elliott, but one that he was very clear about, that it does happen, not that often, but it does happen. And here we had an example of it. In fact, it's a textbook example, and which is why I continue to pull it out and say, when we get into this situation again, we can't discount it. We can't say, oh, that can't be what it is. Because it could very well be, and it could happen twice in the same wave pattern. So in other words, within that fourth wave of minute degree, maybe we get another running fourth wave. It will not be easy to count, but at least we're going to get a heads up. Because if you remember when we were in here, what was I talking about? 3, 3, 3, 3. Everything was threes. And so we were thinking, okay, that we were looking for the completion point, possibly here, of minute wave 4, putting this all in minute wave 5 up, and it just didn't work, obviously. So that came about, and I actually initially had put minute wave 4 here for running 4. Then the climb that we started to go through, and what was still left, and what my FIPS were showing me, I had to bring it down and extend the third wave, the minute 3, instead of it being minute 5. Now, as I've said before, I am not ruling out that it really was minute 4 and we're in that minute 5th wave. I will not really be able to make that type of a call until we're done, until we reach that high, and then can determine exactly what degree we're in. So, all of that being said, right now we're leaving it that we're in minuet wave 5 of minute wave 3. An alternate is that we're in, I'm going to say again, like a 5th wave up, but if it's of minute degree, then we change all of these degrees as well. These would then be minuets. And I could say we're in minuet wave 5 of minute wave 5 of minor wave 5 of intermediate wave 5 of primary wave 3. That is still actually out there. But what continues to hang over all of this is what AI, what algorithms are beginning and have been showing, that we should expect a surge into the fourth quarter. Well, surge to new all-time highs shouldn't be happening in a large enough corrective phase. In fact, if we reach that high now in the month of October, then we're going to be looking for a primary fourth wave to begin. And what would that suggest? Surging in the fourth quarter would not be the new highs. I mean, it could be, depends on what the A wave looks like, and we have an irregular B wave again. So we have all these things out there. And people say, well, Elliott wave is just not conclusive. And I got to be honest with you, it is conclusive. It shows you all the possibilities. And a good analyst will kind of continue to roll with this is a preferred, this is the alternate. And then even within that framework, you're going to have to go, I have to go back and forth between, well, it could be this or this. So as I present on a consistent basis, I normally attempt to give you both sides of the picture. What happens to the upside, what could happen to the downside, and still fit within the overall count. So constantly I'm working with a preferred and an alternate, or alternate plus additional alternates, and which one takes priority over the other. But this market, again, is at new all-time highs. And now we're consistently creating new all-time highs, and not on the back of a truly rosy picture, global or even for the US. So you start to wonder, what the heck is propelling the market? Well, I think right now, a lot of it, to be honest with you, is options trading in our indexes, in the ETFs, in the zero DTEs, in the weekly expirations, in the monthly, in the quarterly expirations, how things build up, where they go. And why? Well, because there's still a tremendous amount of capital being traded, and not just in options. Well, yes, in options, but not just in the equity markets, but in the bond markets, in the precious metal markets, in other treasuries. So we have a very active, high money value still being traded. Or again, for example, Friday's expiration in the SPX, which really came off, the bulk of it came off on the opening. But overall, the nominal value of that expiration and what was going to be expiring was $1.1 trillion. That's just what was going to expire for September monthly. Now we've got quarterly, and it's got another big number to it. And also, tack on top of that, we got the JP Morgan collar. which will be rolled out for the fourth quarter. That's going to be interesting. Where do they anticipate it's going to, what do they feel is coming for the fourth quarter? And again, if they're going on the basis of which many of us are going on, that we're expecting a surge in the fourth quarter, I would expect the call part of that to be way up there, 68, 69, maybe even 7,000. I don't know. But it's going to be interesting to see, because then we're getting an idea of what does JP Morgan think about the market, or what do their analysts think about the market, and how do they want to hedge that fund, which is what they're doing with that collar. So yes, I have a big interest in where they're going to place that, and we won't know until September the 30th. All right, let's go over and take a look at the NQ, just on an Elliott wave basis. All right, so good Friday. We had a great Friday, but just to kind of pick it up, here is minor wave 4 completion point, April the 7th of this year. So from that point, we have been involved in a minor fifth wave up. And so for the minute degree, we have minute 1 and 2 complete. We're still within minute wave 3, but we're in minuet wave 5 of minute wave 3. And now I'm going to start bringing this down. Let's take it down to that hourly. And let me again move this up to include another 10 days. So we got a little bit more to look at. And here we have it. Excuse me. So what we have, minuet wave 5. Well, inside of it, 5 waves of sub-minuet level, 1, 2, 3, and 4 complete. Wave 4 finishing up last week on the 17th. So last Wednesday, basically on the close, we finished sub-minuet wave 4. That puts us in sub-minuet wave 5, of which, to my best of my ability, I'm going to bring this down again to the 15-minute chart. I got 1 and 2, right? Again, we're in wave 5. It's going to consist of 5 waves. There's 1, there's 2. Wave 1, beautifully extended. And here's wave 2. And then what now? Well, 1, 2. Again, 1 of 3, 2 of 3, 3 of 3, or we still have additional. I would say we still have additional, because our fibs for wave 3 come in 618, wave 3 being 618 of wave 1. Is that going to work? Not necessarily. What we might have to do is bring this down if that's the case, because what we're really looking for here, folks, is the 100%, wave 3 being 100% of wave 1. If it's not, and it comes in under, there's a lot of pressure on wave 5, a lot of pressure on this count. Because what is the rule that I do not break? Wave 3 is normally the longest and the strongest, but here's the rule. What it cannot be is the shortest out of waves 1, 3, and 5. So if it's going to come in shorter than wave 1, the pressure is on that count. The pressure is on that fifth wave not extending. The pressure is on that fifth wave coming in really short. Is it possible? Of course. As long as wave 3 is not the shortest wave out of 1, 3, and 5. Then it's all acceptable. But I don't like to go into that with that in mind. So that's why I will continue to count all extensions as a part of likely, that third wave. And then we'll go from there. And we'll see how that goes. I mean, I could put this down to here, 1, and this is 2, and that's 1, 2, and we're inside the 3. And so then maybe we got a little bit of different picture. But right now, I'm leaving it the way it is, because it counts pretty clean up to put wave 1 there, wave 2 here, 1, 2, and we're inside that 3. Wave 3 should catch some fire and start heading up. But look at how high. This is 24,861 is where we finished up on Friday. And first of all, we have 25,008, 25,020, 25,125. And that's where this wave 5 will be equal to wave 1. But then this has got way more to go. If we got 1, 2, we got a 3, a 4, and a 5 to do before we complete this 5. And then down the line. So what's going to be above that? 25,669 for this 5, and then upwards to, if we do that 5 on a sub minuet level, then we're completing sub minuet wave 5, minuet wave 5. We're talking about then also minute wave 5. But here we are. Let's catch this now. Here we are. We are still trying to complete minute wave 3. So it may garner that we need to move back out. All right. Minute wave 3. That's what we're looking to complete. So if I bring this back down to that hourly chart, I may, but I'm leaving it alone for right now, but we may have to make some adjustments of what we're doing up here, particularly within this finishing 5, right? And once again, bringing that down to the 15-minute. Now, what am I going to do? 1, 2, 3, 4, and this is 5? Possible. Very possible. And I'm going to continue to look at that because the futures market will kind of determine. I can go over to the NDX and see if it doesn't fit cleaner. And we are 3, 4. And what do we got? 1, 2, 3, 4, 5, 1, 2. 1, 2, 3, 4, 5, a 3, 4, 5 of 5 of this 5, and then minute wave 3. So again, here we have 24,890. How can we match that up? Well, right now we know there's over 200 points worth of premium just via interest that goes into the NASDAQ, it goes into the NQ. So if I'm looking here, as if maybe this finishes 1, and that's 2, and then we're into the 3rd, or this finishes 1, that's 2, and we're starting in the 3rd, and the 5th wave would be 100% at 24,890. I go back over to that NQ. How am I going to get up there? Right? So here we got a lot more trading. And so 24,008, if we add 300 to it, we're up here, right? 25,124 for this 4th wave. And then we just need to get this together. So that's why this might change. We open this up, and I'll be able to look at this more carefully again, as I have been, but still 1, 2, 3, 4, 5, 1, 2, and then we're getting 1, 2, still putting us into that, where are we going to come into? I mean, it changes the dynamic slightly, but still, I think we're going to be up into above 25,000 before all is said and done. And that's just going to complete the 3. And then that's just completing the minute 3rd. So we could be all the way up here, right? This is the minuet 5. These are minuet 5. So we can break it down. There's still upside. So it starts to get a little confusing, but we need to let the market play out and see where we're going to go. Again, I don't think this is a breakout. Yeah, obviously it is, but in terms of a breakout that's well supported, a breakout that should just really start an additional stronger leg, I don't think so. I think we need to do a stronger correction before we begin that stronger and final leg up, which will take us into year end. So in between, I think we finish this. We have a decent pullback, again, back out to that 4th wave. I didn't need to bring it all the way out to here. Let me bring it out to here. Brings it back out to that 4th wave, which is still a decent one, right? We're up 24,860, even off of Friday's highs. What do we got? We have that low, which is 23,027. So it's over 1,000 points. So it goes to 1,800. That's a pretty big drop. And it's not done yet. So it's going to be even bigger. So That, I think, the minute wave 4 should be sizable, and that might take us to October. And then we get, into that fifth wave up. We'll see. Timing, of course, is everything. All right. That's kind of where I'm going to finish this. In terms of gamma levels, more importantly here, I'm going to see if we can make some adjustments to start getting some that are more applicable to the NDX and the NQ. So lately I've been relying on the Qs. And because of how the Qs are priced, it's the same index, but the equation to come up with the price of the NQ versus the NDX and the NQ is kind of mind-boggling and not very easy. So we will see how this all kind of plays out. Okay, so our next update, where we will update those gamma levels, will be on Monday morning